Hi, my name is Louisa Sijabat, and I'm a registered liquidator and a registered trustee in bankruptcy. So in today's video, we're talking about how a voluntary administration process can be used to help to restructure a business so that it comes out the other side in a viable form. So voluntary administration is a type of formal insolvency appointment where somebody like myself gets appointed to a company as what's called a voluntary administrator to take control of that company and to conduct an urgent assessment of its financial position. This is usually done together with the management of the company, who have more knowledge about the company's operations and details of the company itself. So what happens is when a voluntary administrator is appointed, there's an automatic moratorium or freeze on creditors being able to demand repayment of their debts if they're what's called unsecured creditors. So secured creditors, as in ones with specific security over either the company or its assets or some of its assets, still maintain certain rights through this process. But all unsecured creditors and court actions by unsecured creditors do get frozen so that the company has a little bit of space, breathing space, to consider what its future can be or should be. So there is this moratorium. So one of the roles of the voluntary administrator, somebody like myself, is to go in and look at what's happening in the company financially. So this involves going through accounting reports, financial reports, talking to management and talking to key staff, sometimes talking to key customers and key suppliers, and if there's a key lender or lenders in the business, usually talking to them as well. It also means that sometimes the voluntary administrator may conduct the analysis and decide that the business may be either able to be rescued in some way, shape or form, or that it may be best that the business or the assets of the company are sold, and they might undertake a sale to generate as much money for the people who are owed money by that company, as much money as possible, or as much money as they're able to reasonably get. So they might do an asset sale. They might do or facilitate a debt compromise plan of some sort. So some third party, it can be related to the existing management or shareholders of the company, or it could be totally unrelated third parties. They might come to the voluntary administrator and say, we would like to either buy the business, buy the assets, inject money, but this is what we want in return. It's so broad what can be on offer. And it's the voluntary administrator's job to review any proposals received, see which one's best, see which one's plausible and not just wishful thinking, and see what's in the best interests of the people who are owed money by the company, and to see what could plausibly happen for them to get as best an outcome as possible in the circumstances. So as part of this whole process, sometimes what happens is the administrator recognises that certain locations are not viable or just not very profitable. What they can do is terminate leases under this voluntary administration process, and that debt that is owed to that landlord or those landlords form part of the debt in the voluntary administration process. This means that if the business comes out the other side, either under a debt rescue plan or through someone purchasing the business or the assets of the company, they might not have leases for unprofitable locations anymore. So this can be quite a useful way of dealing with unprofitable locations, or even business units or like divisions within the business, especially if it's quite a large company, that might be underperforming. So as part of this, and the the business rescue plan, which can include a debt compromise deal with its existing creditors, if management or the third party or whoever is planning to put this proposal forward, this proposal needs to be voted on by creditors in order to be accepted. So they can't just fancifully say, oh, well, we'll just decide not to pay you or pay you some random amount. The amount proposed has to be agreed by a majority of creditors and the majority in number of creditors as well as majority in value. So there is some kind of check and balance mechanism there. What else can a voluntary administration do? Actually, I should tell you what a voluntary administration can't do. It doesn't, in and of itself, result in a strategic plan for the future of the company. It's definitely highly recommended that one is done at this time, given this is the opportunity to reset the business and move it forward. But it's not a mandatory part of the process, but it is something very highly recommended, especially if you're working with me on a voluntary administration. It also doesn't stop secured creditors from exercising some of their rights. So you might recall that I mentioned a little bit earlier in this video that secured creditors are ones that have some sort of security for their debt, either over the company or assets of the company. So secured creditors do maintain some sort of rights. But what it does is it gives the company a chance to reset itself and, if viable and if accepted by the creditors, to reinvent itself in some sort of way so that it can keep trading, so that people can still have jobs, so that there's a chance for some of these creditors to make up some of their losses from future trading, and for the, ongoing nature of the business, so that it can be ongoing. Now, having said that, if there is no viable rescue plan put forward and one that's not acceptable to the unsecured creditors, then the creditors will generally vote for the company to go into liquidation, and that's the end of it. So essentially what the creditors are saying at that point is, we don't think that there's anything viable or worth our while here for you to give this company another go, and it should no longer exist economically because we no longer believe it's got viability in the economic system. So there's a lot there. There's a lot more to voluntary administrations as well, but they're just some of the highlights of things that can be done through a voluntary administration process to help potentially rescue a company.